Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris milling wheat, Minneapolis wheat, and London UK feed wheat. Paris milling wheat. For another week, Paris milling wheat has very different patterns, though maybe some similar results when compared to Chicago, Kansas City and Minneapolis wheat. Here there has been one continuing dominant pattern, a quite large pattern, that 2 weeks ago took a break on the downside. It is of course the dark blue highlighted late August 2024 to date ascending triangle pattern, currently 236 to 241. This pattern has a requisite combined 5+ touches and is made up from a lot of smaller patterns within it, but it can be clearly seen on my daily chart. 2 weeks ago I laid out targets below for this pattern, and I quote, primary target X would be in the 226 zone with a secondary harder to reach target X1 down in the 195 zone. End of quote. Last week the market reached target X, the primary target, pushing down below it, though not fully breaking the significant purple 2024 to date uptrend, currently at 224. What really stopped the fall was the 50% absolute Fibonacci line at 219. This, apart from its obvious significance as a 50% absolute Fibonacci line, has importance because it helped hold up prices back in November and early December last year, and also eroded the bearish incentive back in August and September last year as well. This is an interesting battle between the bearish pressure and the bullish support. Will this bearish pressure be enough to see further moves lower, or will target X at 226 have been enough, and the stoic support below at the 50% absolute Fibonacci line start the formation of a new pattern? That's the question I've been posing myself and to yourselves. Last week I amended the further targets below into target X1 being at 205 as a secondary harder to reach target, and target X2 being a tertiary target, an even harder to reach target, down at 194. Now this week has been a breather in the market's decline. The question is whether prices will take this time to form a possible bearish halfway hesitation, or will they recover? The latter seems unlikely right now, and the former, well, it is too early to say, though it might comply with what is going on in other grain markets. Minneapolis wheat. 2 weeks ago I said, and I quote, "So a very significant move right from the start of this week, with consecutive closes below the lower bull channel line of the late January to date bull channel. What looked like last week like the market eyeing the overhead middle sign, currently at 665 for the late August to mid-November 2024 bullish shift pitch hook, well, that turned into the market taking fright at this and turning lower." End of quote. Prices dropped down last week below the previously mentioned 585 to 610 congestion zone, dating between roughly mid-November last year to late January this year, finally halting at 578, an approximate high area dating from June 2019. Even to me, this was somewhat surprising. The recovery since then has seen or been up to the combination of the April 2021 low at 606, the purple previously broken September 2019 today uptrend, currently at 605, and the dark blue, also previously broken, July 23 to date downtrend, currently at 606. All these are, as obviously said, quite close together and are just underneath the moving averages. And what's interesting about these moving averages together, which is the short moving average currently 610 and the short medium currently at 612 and the medium moving average currently at 610, they've also formed a bow tie formation. But unlike Chicago wheat, which had a similar pattern, formation here is not so well defined. And it still does share the similarity with Chicago wheat in the tines are not in the right order, and it has a slightly bearish tinge to it, though this of course may change. I have for now not highlighted these moving averages, as doing so on my daily chart would further obscure what is a very narrow market juncture. So what have you to look out for Well, that's in between the 15 to 20 sessions forward from the crossover, and I estimate the crossover to be the same as Chicago wheat, so look towards between the 4th to the 10th of April. Thus, watch out for one or more of the following: a change in trend, a reinforcement of a trend, and above all, volatility. In recent days, what has been left behind by this move lower, ever since at least early January, is a V-top pattern that's part of a larger bump and run reversal pattern. The primary top target point for this move lower has already been reached in the 585 zone, as has indeed the secondary harder to reach target at 581. The tertiary, much harder to reach, not target, but let's call it potential, down at 549, now seems too far for the pullback, with the pullback up we've seen over last week and this. And that's been up to the combination of the April 2021 low at 606, the purple broken September 2019 today uptrend, currently 605, and dark blue also broken July 23 today downtrend, currently 606. I asked myself again, as I did last week, do I think there is still opportunity on the downside? The answer is possibly, but I once again feel, as I did at the end of my commentary from 2 weeks ago, that, and I quote, with a lot of congestion between about 610 down to 585, dating from November last year to January this year, and that could erode any further bearish incentives, end of quote. I might be wrong on this as well, but as a consequence, I've chosen to label these last 3 weeks as a V-bottom, but one that may be building up to a possible bearish halfway hesitation. This is one course of action for sure, but it might be something else, and I have considered, though not as yet labeled, the idea of the whole of 2025 being a possible diamond bottom pattern type. It may not be a good example of such a pattern, but it does have the possibility of being one. I will apprise you more on this as it develops, as well as on the bow tie formation. London UK feed wheat. There continues to be here on this daily chart, even now, these many months, only the one major significant pattern here, and that is the bright red late May to early July 2024 bearish shift pitchfork. Yeah, late May and early July last year. The market has recently reasserted the dominance of this pattern, with prices breaching, then repairing an attempted break higher over the bright red upper tie, currently at 179.40. Add to this the recent narrow mix overhead of all the moving averages, though they are now separating out, as well as the 50% absolute Fibonacci line at 180.5, and you had, and I suppose still have, a close together compacted area overhead that, and as I have repeatedly said for months now, that is brewing up for a significant move, which may have possibly happened over late February and into March. I was, as I have said 12 weeks ago and ever since, and I quote, even now still looking for that better pattern to appear, and until that shows up, I'll continue utilizing the bright red bearish pitchfork, end of quote. So my point is, the bright red bearish pitchfork has turned out, once again, to be the pattern I was looking for all the time. This leads me to my final 4 points, and 3 of them were something that I noted in my recent annual commentary on London feed wheat. Firstly, I saw there the potential for a very large May 23 to date cat's ears pattern. This is a bearish pattern, akin to a double top, but formed after a big fall, such as the fall we had earlier in 2023, as well as an even longer term second pattern, an August 2020 to date very large head and shoulders top pattern. These two super long term patterns are still live, and they both rely on one feature, and that is just below the market, and that is their common neckline, highlighted in dark blue on my daily chart. It's currently at 167.45. For these past 2 weeks, prices have been sliding along the top of this support of these dark blue pair of necklines. The third feature is a little more longer term. It is the March 2016 to date recently finessed uptrend, highlighted in purple on my daily chart, and it's currently at 167.65. 167.65. Now last week, this week, and for at least another couple of weeks, we have the market crossing over and reinforcing the dark blue necklines. We also have the May 2023 low 168 even, which has added its support, however limited that may be, as it had been previously breached, to these two necklines and the purple uptrend. Now, there is one major possibly severe criticism of the two necklines, and that is they have been previously breached, and some would argue broken. However, I countered that argument by saying that I transposed these from my longer term monthly charts, and whilst on a daily and even on a weekly chart, they may appear to be breached and even broken. On the longer term monthly charts where they really live, they are still somewhat valid, and so I would not take these as cast iron lines in the sand, if you like, that should not be crossed, but as longer term strategic patterns that we should bear in mind and occasionally bring a closer eye upon. Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.